What's going on, everybody? Happy Saturday. So I know a lot of you guys have been asking me a lot of questions about LYFT, about whether I purchased some LYFT stock, and about the stock itself. So I just want to answer those questions and kind of explain to you guys what's been going on since LYFT IPO'd on Friday. So for starters, when LYFT IPO'd at $72, you'll see right here with the chart, it shot up right away to a high of $88. With that said, I actually put in an order for one share of LYFT at $72. That order was not filled, and let me explain why that order was not filled. So essentially, when the IPO first happened, all of these big hedge fund managers and big financial advisors had first dibs on shares of LYFT that were priced at $72. These are the big Wall Street guys who are moving large sums of money, so they're looking to buy 100,000 shares, 200,000 shares of a company at a time, so they get first dibs on those shares. So a regular person like you or me, we were actually not able to purchase shares of LYFT at $72. The first time we would have been able to purchase shares of LYFT would have been at its peak at around $88 to $85. So again, I put in that order for $72 for one share, and it was not filled. So then throughout the day, it started at 88, and those of us, the regular people who tried to get in, actually got burned. The stock fell from $88 down to now $77 after the trading day was over, because after the initial rush and the initial hype around the launch died down, people were less willing to pay such a high price for the stock. Cool, so now that I've kind of explained the pricing and what happens during the trading day on Friday, let me kind of explain to you guys LYFT as a company, its pros and cons, and if you're interested in purchasing LYFT, I want to give you kind of an unbiased opinion on the company itself and why you should maybe buy some shares or maybe stay away from this company. So first, let's look at the buying option. I have three options here: buy, sell, hold. So I'll start with buying. So if we look at reasons why you should buy LYFT, they have a positive brand image. Around sometime last year, Uber CEO actually stepped down because he got into an argument over pay with a Uber driver. This was terrible for the Uber image, and since then people have had a really negative view toward Uber, and they've started to really grow to love LYFT, the LYFT drivers, and just the LYFT company as a whole. So LYFT has really been able to capitalize on this positive brand image recently. Secondly, from 2017 to now, LYFT at 2017, they actually owned around 14% of the market share for ride-hailing services, and now they're actually up to 30%. So that's huge. LYFT is growing rapidly, and people are, both drivers and riders, are becoming more and more comfortable using LYFT. So that's great for LYFT. And then finally, we look at their numbers and we look at their increase in revenue from 2017 to 2018. Their revenue increased by over 120%. And then in 2018 to 2019, their revenue increased by 105%. So for two back-to-back years, this company has posted over 100% increases in revenue. That's insane. That's amazing. And the growth there is really, really something special. So there's a lot of reason why it makes sense for people to want to invest into LYFT. Now let's look at the reasons why maybe you want to stay away from this company. Let's look at the sell column. If we look here, I think the number one thing with LYFT that they're going to have to face at some point is the competition. As far as competition goes, they have Uber, they have Careem, and actually a couple of days ago, Uber actually purchased Careem, which is a ride-hailing service internationally. I believe they're located in India. So Uber actually purchased them for around $3 billion last week. And then you still have taxis that are going around, a lot of older people or people who come to a new country and they don't speak the language. They might just call it a taxi because they don't have the Uber app, or they just are still uncomfortable with the technology. So again, you have the competition. That's a big thing. And as like we were saying, with them owning 30% of the market share, Uber pretty much owns that 70%. So Uber still has the bigger chunk of the market share for ride-hailing services. So you look at that, and then you look at Lyft's business model. So Lyft is currently losing a lot of money. These guys are burning through cash. In 2018 alone, they lost $850,000. They almost lost $1 million net losses. Not just they lost a million and they made $1 million. This is their net loss after expenses for advertising and paying drivers and all of that stuff was taken care of. So that's a huge amount. And then for this past year, they've actually been losing $1.74 per ride on average. So Lyft right now is not making money when you call Lyft rides. They have to pay the drivers, so the drivers are making money, and then the person who receives the ride, they're paying, but this payment is not meeting the demand and the money that's required for them to operate. So right now, one of Lyft's key attractions has been that sometimes they have lower prices than Uber. And while this is good and well for the short term, in the long term, if this company can't figure out how to start making positive returns on their ride-hailing service, this could be a problem. And again, the reason why this will compound that problem is because now they're a publicly traded company. Now there are shareholders who have purchased hundreds of thousands of shares of Lyft for $77, for $80, for $85. And so what that's going to do is that's going to put more pressure on Lyft to start producing revenue a lot quicker. So with that said, we kind of look at the reason to buy, the reason to sell, but there's also a lot of reason to maybe just invest for the long term. Again, we've already seen Lyft has a lot of growth potential. They went from having 14% of the market share to having 30% of the market share in a matter of 2 years. So that's very impressive. And then two, they're focused in the United States. With Uber's actually operating in 65 countries right now, and Uber's also expanding into Uber Eats and Uber Freight, which is a service where pickup trucks can go back and forth on Uber, picking up cargo and things of that nature. So while Uber's expanding and increasing the area that they operate in, Lyft is just focused on ride hailing. And so one thing that people have said is that this focused stance on ride-hailing service might make them the better ride-hailing service in the long term because they are focused on just ride-hailing and not any other forms of business. Cool. So I hope that kind of cleared everything up for you guys with regards to Lyft's recent IPO. I know a lot of you guys use Lyft and have been really curious about whether you should maybe go ahead and start purchasing some shares of Lyft. So these are just kind of the facts that I've learned through my own personal research on the company. And again, as always, you should not buy or sell stock based solely off what you hear. This is for entertainment and educational purposes only. Godspeed.